right, guys, thanks ever so much for coming today. Thanks for being here. So the format of this is going to be the same as before. There's the Slido. We've got actually 50 minutes for this panel, so we're going to take it easy for the first half an hour or so. But then, yeah, this really is for you guys to ask questions about funding in the ecosystem, so please participate and please ask questions. So to kick it off, I'm wondering if all of you could give a very quick introduction about yourselves. And yeah, maybe we can start here with Francesco.
Sure. I'm feeling this Devconnect is never finishing, huh?
Never.
Like since last week and this week. But yeah, happy to be here, guys. Francesco Androli. I'm head of DevRel at Consensys. That's my main hat, and I'm also non-operational for a small early stage venture fund for Sub-Saharan Africa that we started 4 or 5 years ago. So I'm a little bit on the both side, very let's say developer ecosystem oriented, but in the same time, so always looking for new let's say funding opportunities and you know activate the ecosystem.
Thank you.
Hi, I'm YJ. I'm part of Uniswap grants program. So we're a grants program funded by Uniswap Community Treasury to provide grants and help to builders or just community users who want to expand and work on the Uniswap ecosystem as a whole, trying to push for public goods funding in the DeFi ecosystem. Yeah.
Hi, my name's Andrew. I work at Index Coop, a decentralized asset manager and structured product provider. I'll probably be talking on this panel more from what it's like from the inside of what it's like to be funded, but we'd also have a grants program as well. So yeah, great to be here. Thanks.
Hi, I'm Justin. I manage a centralized fund. It's technically a mutual fund, and I'm primarily a researcher. So I'm really focused on trying to understand cryptocurrency.
Cool, thanks. I like the variety, and it's not all about the funders, it's also about who receives the money in that regard as well, because there's lots of ins and outs of that process. So to kick things off, the first question is, there's grants, there's IEOs, we had ICOs, there's liquidity bootstrapping, venture investing, all different ways of funding in this ecosystem. What are the most important fundings that you're, the most important funding trends that you're seeing right now?
Take that. Oh, sure. Go for it.
I'll start with an opening statement here. I think that the most important thing, I think, in cryptocurrency when it relates to funding is actually a lot of is around DAOs, ICOs, and crowdfunding and grants attached to DAOs. And I think it's also very important to separate different sorts of funding. When it comes to VC funding, I don't believe that you know, DAOs should be combined with VCs because it creates an incentive for rent-seeking behavior, which can then render the DAO itself uncompetitive in comparison.
Yeah, I can definitely agree on that. And I want to say exactly what you say, basically, like it's a mix of different sources, smart money versus, let's say, scaling money. But yeah, at the end of the day, I think you need also like to have good mentors and investors. Sometimes it's very difficult to get on a decentralized identity like DAO funding or something like that. But I think it's a mix, right? And I think we're just progressing in a way that you know, we're getting there, but we need to mix up and not think about, hey, you know, like getting funding or grants from a DAO that, you know, no one really support me apart the money. Yeah, so it's a mix, yeah.
I'm biased, so I'm going to say, you know, just grants funding for public goods in general. So, and there's a lot of money, obviously, in crypto in the last, I don't know, months and years. And I think we are in a unique position where we should encourage and push for community and protocols and a lot of big treasuries to provide and push for this type of open source, accessible, decentralized, you know, public goods funding via grants and other mechanisms, Gitcoins, the RL fund, and the likes. Yeah.
Yeah, just to touch on the point of VCs, I mean, we did a VC round ourselves. Understand it can be controversial in the ecosystem. It can be controversial within DAOs as well for some of the reasons you just pointed out. But in many senses, I think they're probably a necessary evil in some parts, but they also do provide benefits as well. And I think it's just that education kind of broadly in the ecosystem as well to internal contributors around the pros and the cons that they bring, because we would not be able to do some of the things that we do without that kind of long-term sustainable funding. So there's a time and a place for it, I think.
I think it really does depend on the specifics. Like, I'm not saying all VC funding is bad. I just don't believe that the economics should be mixed with DAOs, so to speak. So I'm not sure what the specifics are of Index Co-op, but if you have, say, a Red Hat model in a for-profit company, which then exists, say, alongside something like a DAO, which has its own funding mechanisms and grants, and then I think that's fine. But I think the problem arises when VCs might attempt to carry out rent-seeking on the protocol itself in one way or another to collect fee or revenues, and I think that's in conflict with the the type of ideology of wanting to have a decentralized and more equitable world. I think is what we're all trying to build here as well.
Yeah, I just want to say something, because to add on this, like I see, I mean, obviously it depends on the use case, but depends also on the stage of the funding. Because if you're going like pre-seed or seed, but super early, I think like the ecosystem is moving to more, let's say, ecosystem events. Like, you know, you're getting grants even through the ETH hackathon, like that you get, you know, actually after the 3-4 days, you're actually able to get funding to just kickstart stuff off. So I think like it's moving a lot where really the builders are, and directly through the source. That's for early stage. Obviously for grow, like you need definitely like that kind of amount of capital. Yeah.
Well, I'm interested in hearing this and hearing your thoughts on, obviously there's a topic of smart money, right? And you say VCs can provide a lot of value. Then from your perspective, YJ, before I forget this, in terms of grants, like, do you consider that also smart money? Like, in a sense that are you also providing value, or is it literally you're just giving out the cash?
I think it's providing value in the sense that we want to provide funding to help aspiring builders or projects to bootstrap their whole project. You know, pre-seed, seed. We try not to use those words, right? Because we're not looking for a financial return on such funding. It's more to just push along the whole ecosystem to make sure that we can get decentralized public goods out there, right? Yeah. So we try not to say, okay, if I fund you, I want you to be, you know, the only one out there, and then you can start monetizing and make money and give it back to the treasury, right? Where we're not looking for that. So it's kind of a different incentive or objective, I guess, compared to VC funding. So, and we can't, just like VC funding, we can't possibly fund everything and then they all turn out to be successful, right? There will be failures, there will be people who cannot continue with the project, or someone else just trumps them, and which is fine, but at least we make sure that we are betting and funding horses that have the aligned incentives or values as us, which is to make sure that you continue to be decentralized, to be open source, to be accessible, to avoid rent-seeking behavior, as you say, where you're not bringing anything into the whole ecosystem other than money. Because to be honest, right now, like, we don't lack money in the ecosystem, if you ask me. If anything, we have too much money flying around. So the important thing for myself personally is making sure that you steer and help people and builders and newcomers realize that, no, you don't need to like take crazy short runway with crazy metrics from VC just to build value into the ecosystem. You can, as you say, go to hackathons, meet people, you know, do some hacks. The output can be okay, but then you meet people, you know that there are avenues of funding like grants from various sources that can help you, you know, make a start. You know, we still have to pay our bills, surely. So you don't have to go, oh yeah, I'm going to like get VC funding, and then, you know, 6 months later I need to go around seed A, B, C, blah 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 blah. It's never ending. You know, you can always start with, okay, I spend some of my time working on something that I'm passionate about for this protocol, for this ecosystem, and then I get a grant to scale it a little bit, and after that, we'll see how it goes. But at least at any point in time in your work, you know that you are true to like the decentralized ethos of blockchain. And if you decide, actually, I'm sick of it, I'm out, you have open source stuff, you documented your work, someone else can pick it up and continue. So that to me is the key there for grants funding, yeah.
Thanks a lot for sharing.
I just want to say that, I don't know, maybe it's a fun fact, but I feel like it's, this kind of early stage capital or any grants like in the ecosystem events are mostly done not like through the best pitch or the best like things happening, but it's actually like the best team that did like this MVP earlier. And most of the time, all the people know each other by the ecosystem. You have a bunch of like Consensys folks, they build this protocol, boom, like it's interesting, they build something cool in this hackathon, let's fund them, right? So it's less the pitch that counts, but I know it's just a fun fact. I don't know if you agree with that or you have something else.
I think if it's a good project, I agree with that. But yeah, I've also seen the opposite as well. So
You can't always know, right? I mean, by definition, you don't know whether it's going to be a good project. So for me, I struggle to see like how we collectively decide, oh yeah, that's a good project, I'll fund it. Like,
I mean, you can apply like an analysis and an evaluation to predict and character evaluations to predict the quality of the team and look at their previous track record. Based on that, you can evaluate the likelihood of success on whatever you're funding.
But it takes time and resources. Sorry, James.
And I was just going to add as well, from an internal perspective, when we go for fundraising, we don't just accept anybody's money. So it's incumbent on those raising as well as on those funding to not just concentrate solely on the money. So we ask VCs, what are you going to add? We don't just, and we try to partner with as many VCs that have a good track record and things like that when we went for our funding round. So yeah, we don't just kind of just take whatever we can get. We set a limit, we try to make sure it's oversubscribed, and then we kind of pare it down to say, okay, we want to work with these people, we don't want to work with these. What else are they going to bring apart from money?
Yeah, don't forget due diligence works both ways. And James, on that note, like, are there any particular things that you look for when you're raising funding? Or, questions, I'm looking for specifics, if you have any, on things where there have been like massive red lights or things that investors have said to you where you're like, okay, that's why I want you guys on my cap table or our cap table.
Luckily for us, when we went through it, we had interest from bigger names. So we had like the 1KXs, Galaxy Digital, Sequoia, those kind of names come through. And when you have that, it's kind of easier because there's kind of, the 20th person wanting to get in on the round.
The momentum.
Kind of say, yeah, sorry, no, like we're already full. But, we do due diligence, just beyond the headline name, and we ask, what other projects are you working with? What can you bring here? What is it about us that makes you want to invest? So yeah, we invest time and effort into the relationship for sure. And that usually kind of, cuts through some of the unnecessary inefficiencies and whatnot, yeah.
Cool, thanks for sharing. I'm wondering if you guys also have any suggestions as also investors and grant givers that you want to hear, that if a project asks you those sorts of questions, it shows like, hey, these guys are serious.
I don't know. I'm a big fan of like infrastructure layer 0 questions. So if a founder really know his product and is not just business developer kind of like consultant, I think that's definitely like cool. So I don't know, like very, let's say, deep product questions. I think that's definitely good to know.
In my experience, I think it's more the person giving out the investment asking the questions. But I agree.
Yeah, for us, is we are kind of strange in the sense that I think grants funding is we try and market and let people know that there is this avenue as a source of initial funding, but we don't go out and actively chase for projects to fund. It's difficult to take that balance, I think. So it's somewhat reactive in the sense that it will be teams or people coming and applying for the grants. So you would maybe can assume or guess that they feel that these grants is value aligned with them, right, of what they are trying to do. And of course, they need to fit into the scope of the grant. So for us, like Uniswap grants program, it has to be related to Uniswap ecosystem or AMM or DEX as a whole. And I guess for like Ethereum Foundation, have to be, Ethereum public goods. Gitcoin is like almost anything goes, as long as you can show that you have community support. So the due diligence front about, okay, what they ask us or what we ask them, you know, in discussion we'll talk about it. But at least so far, we haven't had a situation where people apply, we award grant, and they're like, nah, I don't want it. Like, we haven't had that, you know, so.
I wonder why.
If I may, I'd like to highlight an advantage as well of grant funding that I think is not often appreciated. And I think what we've seen in cryptocurrency over many years is we have run into problems of conflicts of interests and perverted incentives, and sometimes developers don't necessarily do what's best for the protocol, so to speak. Now, what I think is very interesting when the funding itself comes from the DAO or it comes from the blockchain, then that becomes an independent, or actually no, not an independent source of funding. It becomes a source of funding that comes from the blockchain itself and therefore represents those interests. And I think a problem that we've often run into is that a particular project or a particular protocol might be perverted by outside funding. You know, if developers are working for very little money, they're very vulnerable to someone coming along and saying, here's a few million and I want to see these changes. Now, if you have a strong grant program or a self-funding mechanism, as I like to call it, that actually helps protect against that from occurring and actually allows a blockchain to be more sovereign, be more independent, and for it not to be captured over the long run. And I think that's a very important aspect that I think is often overlooked when it comes to grant funding.
Cool, thanks. So the next question I had was, rug pulls are a plague on this ecosystem, as many of us have either heard of or experienced. Like, ultimately, funding for them is important because it kind of gets them going, right? But as they're a plague, what do you think about potential solutions to kind of reduce the amount of these types of events happening in the ecosystem, be that NFTs or DeFi or just generally crypto tokens in general?
Due diligence. Yeah, I think, yeah, I really do mean that. I think we have seen some VCs come through who just don't do any due diligence. And it's like, really? You're just going to give away like hundreds of thousands of dollars without asking any questions or kind of not really showing any interest? It is unreal. And yeah, it goes both ways for retail as well. Obviously, aping into any project or whatever. Just, yeah, do your own research.
Yeah, for the love of God, people, please do your own research. Like, really, like, I mean, pretty much all rug pulls that I've seen, you should have seen it coming. I mean, really, stop investing in Ponzi-nomics. Stop investing in, obviously, greedy, exploitative people. I mean, if you really do your research and you really investigate these people and you really try to figure it out, in most cases, it's actually rather obvious. And I would like to, echo your point as well. Some of the stuff that VCs are investing in, like, it's utterly ridiculous. I wouldn't touch it with a 10-foot pole myself, some of this stuff. And they're getting hundreds of millions in funding. So, yeah, please do your own research, because it will make cryptocurrency just a much better place to be, and it's really up to all of us here to really, you know, be more responsible in terms of what we give our support to.
If it's too good to be true, it probably is.
No, I just want to say, not just for rug pull, right? It's also for like DAOs. When you're participating to DAOs, there are new DAOs coming. Like, I think like the tools for retails, for like actually checking and doing this due diligence are often like underestimated. For example, like, you know, DeFi Llama for DAOs, like how actually the governance really is working. I think like the due diligence in DAO, people just look at the mission and they're not checking out actually how does it work, how is the governance, how is the voting system. And I think we should have for retails more tools to make actually easier the due diligence on top of those things. Because right now, even for layer tools, right, you have like, you know, the TVLs, everybody's just checking TVLs, but I don't know actually from how many accounts is coming, you know, these kind of things, how is the density of those TVLs, these kind of things. I think tooling for retails need to be like up the speed in terms of like educating retails to make a better decision. So I don't know.
Yeah, I think for me, looking at it from a grants perspective, it's just to do with, as I mentioned before, I think sometimes there's too much money coming in, right? And everyone's chasing like a big hit. really quickly. The time horizon is really short. Right? People see that, oh yeah, suddenly there's like billions here, billions there. I want to get in. I don't want to miss out. I'm just going to like ape into everything, including what you're telling me, like VCs doing similar thing on a grander scale, right? Which is crazy. So I think it's a cultural thing. I feel like as a DeFi ecosystem, as blockchain and cryptocurrency, we need to put in place a structure and infrastructure to encourage kind of, we keep saying this, like long-term thinking, you know, but it needs to be value-aligned long-term thinking so that people know that actually start thinking about why you are in this space. Like if you are just in here to make a quick buck, then yeah, there will always be rug pulls. TradFi, DeFi, doesn't matter. There will always be people out there to scam you. And if you're looking for that quick money, you will eventually get scammed, in my mind, or break the law and get arrested or something, or get killed with a hammer. But, you know, so that's why I think from grants funding perspective, like the main way that I think we can help to avoid or prevent rug pulls is to fund this type of cultural work where people and builders and users and community know that actually, you know, this is why I want to be in this space. I want to encourage an actual value add, actual decentralized, trustless consensus in the financial world, and I'm not looking for a quick buck, but I do need to pay my bills, so I find out, you know, sustainable, open source, decentralized way to fund myself, right? Then hopefully that cultural view will filter out to users and newcomers, and everyone stop thinking that, okay, I'm just going to ape into everything, and then one of them will make it big. So.
Well, I wanted to ask on top of that, like, okay, that's the vision, right? How can we make that practical? So when it comes to accelerating DAO grant programs, having more of it, are there any kind of practical things that you want to see happen? And maybe you can start and the others can add on.
I think I mentioned like maybe 2 questions ago that I think right now it's quite a different landscape, so that there are a lot of, well, many protocols and treasuries and places where there's a lot of money locked in, right? And I think we as the community need to push for the discourse to encourage people to start doing more public goods funding, right? And that could be by doing subcommittees, sub-grants, different ways of delegating that funding. Ethereum Foundation does that. Uniswap, we try to do that in grants program. So we started, you know, a community analytics subcommittee to push for community data analytics, commentary pieces, you know, dashboards, just to give people access to that data and information to do your own research type thing, right? So at the end of the day, we are limited by human resource, I think. So we want to bring more people on board in terms of users and builders, right? But we need to be able to do that in a sustainable way and avoid too many, you know, malicious actors, let's say. So my kind of wishes would be that we could push for this delegated funding, kind of peer-to-peer. You can stay kind of anon or pseudonymous, but show your commitment to the cause, and then people know that, okay, you are someone who's passionate about this, and you're value aligned, and then we can try and figure out how to get sub-grants or sub-committees out there to continue to grow this, to accelerate it, you know, because there's no point for us to just throw money everywhere, just like VCs, let's say, you know, like I can't just be going, okay, you get a grant, everyone gets a grant. That's not helpful, even though that metric might be very big, it's not going to bring value in terms of acceleration. So,
Justin?
Yeah, just to add a little bit as well to what we're discussing earlier, I think it is very difficult, I think, for people, especially if you're not, you know, running a grants program or you're managing a fund and you have a research team. It is very difficult for like your average retail investor to invest in cryptocurrency. I mean, it's arguably more difficult than investing in the stock market, which is also very difficult. So I think this is also partially why, you know, companies like mine and projects like Index Co-op exist, is because it allows you to outsource that decision making to the experts. And then obviously you have the dilemma, how do you know who the experts are? And I'm afraid still some due diligence is required there. But this, I think, is a bit of a universal problem that's not just unique to cryptocurrency either.
Yeah, and I think it depends on the size of the protocol as well. So obviously Uniswap is a completely kind of different beast in the ecosystem with a completely different treasury. Like we're just starting to look into grants models now, and we will have like a dedicated person or team to kind of like run the grants program. But at the moment, it won't be for sort of like the public goods. We're not at that size and that scale. It has to kind of, attempt to try and get a positive return on investment for us. And before we, hopefully one day we get to the same size and we can invest back into the ecosystem.
Does anyone here use Index Co-op? We have some hands, nice. It's the DPI, right? The
DPI is the flagship one. The
that was the OG. Yeah. Cool. Well, another question I have, kind of also going down this route is, and I guess we've spoken about it, but I really want to focus on the value of the investee or the grant giver. So post-funding, how can we have that post-funding value, but also keep the ecosystem funding kind of democratized? And you mentioned kind of the delegation maybe of funding, but I think what I'm trying to get at is, where really is the value add of a funder?
I can talk to the kind of the democratizing of basically allowing anybody else to kind of invest in our protocol as well, is that we do set aside some of the funds and some of the revenue as well to put back onto a DEX in the form of a LP position. So we do have protocol-owned liquidity.
Nice.
It's not like really our business model. It's a short-term kind of temporary fix to do protocol-owned liquidity. But there are pools out there so people can invest. And then we also, one of our VCs is also a professional market maker. And they provide liquidity for our token as well. So
that sounds like real value add.
Yeah, exactly.
I think there's also a big difference between different types of investors. So most of the projects that we're invested in, some of the founders might not even know we're invested in it because we're just investing in the underlying token because we believe in what direction they're heading. And you might have like large VC investors who might want to actively participate in a project and help make connections and all of these things. So it really depends on what kind of investor you're dealing with. I would like to also maybe talk a little bit about the retail investor as well. I think what's interesting about tokens and cryptocurrency and funding is that you'll get a lot of loyalty from people when they hold your token. And I think that in itself is also a very powerful marketing tool, and that's part of the phenomena of cryptocurrency that we've seen, is that people might get a token, they might make an investment, and now they're part of your marketing team as well. And this is where we get these armies of people on Twitter promoting X, Y, or Z, and I think it's because there's a lot of loyalty attached and arguably also a lot of tunnel vision attached when people end up investing in a particular token. And I think it's important to keep that in mind, both for the positive aspects and the negative aspects, and especially as a founder, to also be responsible and not to abuse that psychology or emotions of people too much, because that's when you might cross a line, in my view.
So I feel like that there's, as in we were talking about like kind of added value for both the team being funded and the people providing the funding. And I find it interesting that you mentioned just now that there will be, from your perspective, right, as a investment fund, there will be projects that you invest in and the team wouldn't even know you invested, right? So I'm just wondering, where do you see the added value, the non-monetary added value there? Because some of us were already saying that there might be too much money in the space already. So teams like, Index Co-op, they might be looking for VC investors or investors in general that bring added non-monetary value to it. So as an investment fund, where do you see yourself then in terms of bringing that value? Where's the value coming from?
Well, the fund I manage is rather unique in that sense because we're not a VC. We really do long-term investment based on fundamental analysis. So we really do value investing. And in that sense, where I feel we're adding value, because we're doing deep research, because we're doing very deep due diligence, we're able to allocate our capital in a very efficient way. And in that way, we're actually supporting the cryptocurrency market as a whole as well, in my view, because I think how we allocate our capital in the market is how we don't end up with scam projects in the top 10. And I think that's also an important role to play from the early funding stage where a lot of VCs would get in and then have a target to get out. basically, I like to say that what we do is when some VCs might get in on the pre-sale, and then they might sell on retail. If the project has merit, we'll be there to pick up the pieces. And I think that's still a valuable part of the ecosystem with how cryptocurrencies progress.
Do you publish any of the research that you do?
Yes, we do actually. Some of it. I've been pretty focused on doing some public critiques recently of other layer ones.
Ooh.
Oh, we'll have to check it out. Yeah. Yeah, I don't know. I just want to say, it's like raising a fund, right? You have 80-90% of like smart money, and then you take the FI at the end. So I just want to say that's important to have good advisor, to include the community, to include like in every decision. Anything is going much more related to like product feedback. The roadmap is defined by the community through voting. But yeah, no, we just want to say I think you need to have this kind of scaling money, but at the beginning you need to have much more the support of mentors and experts. And that's why we're so attached to the ecosystem, because it's really making your product grow at the beginning. That's what developers at the start need to have. So I appreciate a lot, Uniswap and Gitcoin grants anyway. Right?
Yeah, no, I think that's the thing. Like the non-monetary value add there from grants and public goods funding is also from the support side, as you say. Having people to connect budding teams to, or maybe like in a previous session, we talk about security, right? Audits, getting time slots, advice on security and auditing. So all these are the connections that I think public goods funding and grants program can potentially help with. Yeah, I think that there is more value add there in that sense. Yeah.
That's perfect. I'm going to start asking some of the audience questions, because you literally just said something that's very relevant. So one question is, with rising costs of audits and shortage of developers, also came up earlier, will it not become super expensive to fund the next generation of Web3? How does this impact innovation? Because it's completely right. Like, yeah.
I think it is. Yeah, it's going to be expensive, but that's always going to be an arbitrage, right? Like, if that's really expensive, hopefully that will bring talent into the space to work in developers. I think there's probably a slew of kind of wannabe developers out there, like fast-tracking their Solidity learning curve and all the rest of it, and the same with auditors as well. So.
I will just say more audits are probably a good thing overall.
That's clear.
I think from my end, saying like there's a lack of developers, so sure, like demand is high, supply is low, developers might be asking you for a lot of money to do the same thing that they were going to do 6 months ago. So from a grants perspective, I think because we provide non-dilutive funding, right? We're not looking to get allocation from you. We're actually looking for value alignment and like make sure that what you are building can help overall grow the ecosystem. So I feel like in that sense, we are perhaps less disadvantaged in that sense. We won't be in a bidding war, let's say. If you feel like actually you would much rather get a crap load more money from a VC to do it closed source, then, we were never going to fund you anyway, right? So, but the challenge for us would then become, how do we market grants funding and, public goods being a good thing, to make sure that people who are not currently in crypto or Web3 or DeFi see a way of coming in and then still be value aligned enough to think that I'm not in here just to make money in 6 months and then get out. I'm actually in here for the long haul. Our challenge is to try and market that and push that message out, I guess. So yeah, that's my view on that. Yeah.
Francesco, I'm going to also
speak something about it. Yeah, I just want to say, I don't know, if you look at my colleague at Diligence, those guys are crazy, right? They have 12 to 24 months, like for getting due diligence on their smart contract, for getting audited. I just want to say, yeah, there is a shortage. I think also like it might be good in a sense that there is much more, let's say, competition between projects. I don't know, I'm just following a lot the builder wave, right? When you hear really those are really honest and concrete feedback, you say, hey, a Rust developer building on Luna, oh, that's really difficult. That's why we're paying $1,000 an hour this developer, right? Or you're going to other ecosystem. And I think, I don't know, it just matters where we're following the builder, and yeah, so it's tricky, the situation, I agree. But shortage is not bad, right? If you think about, like, even on the dot-com bubble, how many web developers were out there? There could be the website. A bunch of people were like consulting, and then they were like, yeah, company build it out of that, and yeah. But now it's different. Now we have much more, like, say, founding and grants possibilities. That's why I think that's much more important on the retail side, like not only like having audited companies by private company, but also sharing these audits with retails. Because I don't think still there is enough instruments for retailers to make, let's say, educated decision from the technical perspective, right? Because it's already difficult to, you know, to audit in smart contract. Like, you want to have like a yes or a no, and this, yeah. So it's tricky. Yeah.
So you're saying that you wish that there was, the retail users would be reading the auditing contracts. Just, maybe I'm misunderstanding.
No. I'm just saying, like, the community I think in this industry, and we are moving more forward, I think, on that sense. The community has more power and influence to the product, the company, and what you want to build in terms of product roadmap, funding. That's why also the grants are amazing, right? Because you don't need to go through centralized entities, but you also can spin up. You still need, you still need like VCs, right? Don't get me wrong. I still think there is a big difference between like investing in a company and investing in a token, right? But I still feel the community need to be much more educated, and it's not because they don't do the research, maybe it's a little bit part of it, but it's also because the tooling is still underdeveloped. You know, how many post-mortem reports do we get on like those rock pool, right? It's still very difficult to get those things. I don't know. I would like. I mean, you have rec.com, these kind of things, right? But they're not official. Yeah. So.
You mentioned one thing which I want to ask is, yeah, we're in a bubble. You've talked about being too much money in the space. Like, very quickly, can you all answer, are we or are we not in a bubble right now? This
Yes.
is personal opinions, not representative of their organization.
We have always been in a bubble when it comes to cryptocurrency. I think that all major technological innovation, if you look at this historically as well, comes with a bubble because it's shaking up society, it's shaking up the way we do things, and there's excessive exuberance involved in such evolution and revolution. So yes, I think we're in a bubble, but that's not a bad thing.
I'll steal a line from The Big Short. And say, you don't know if it's a bubble or not, that's what makes it a bubble.
Yeah, true. I feel like it's a bubble in the sense that there's a lot of concentrated money in very short-term stuff, right? But in the grander scheme of things, if you look at a long enough horizon, I think we need to divert money and funding into things that build value, right? So I think similar to or related to all the rug pulls that we were talking about, majority of it, or audits, let's say, majority of it is because like money rushes in so quickly. There's no chance for anyone to discover anything, and then until an exploit happens or a rug pull happens, right? So if you build it such that you are not looking to just suddenly go 3 billion in TVL, then when you get to 1 million or 2, maybe if there's an exploit, people already exploited it, right? So I think in that sense, when things go from 0 to 3 billion like that, then yeah, that's a bubble. But if you look at public goods that are or open blockchain technology that are slowly building up, then to me that's actually still too slow when compared to the whole world, right? Yeah.
That's me. So I want to say, from the speculatory perspective, I think yes, we are in a bubble. But from the developer's perspective, I think we're not, right? We're just keep building. The ecosystem is flourishing. Like every ETH events, them going like much more devs, Web2 devs are approaching the ecosystem, and I think like I'm super optimistic about it. I'm less interested on the speculative side, but I think also bubble is also helpful in terms of bringing mass adoption and trying to get more grandmas out there that know that we're not working only for Bitcoin, but also for other projects, right?
My question is, does it matter if we're in a bubble? Like, we're all here, right? It's okay.
Depends how exposed you are, I guess.
So the next question is, what percentage of investment should be allocated to bringing in new end users to blockchain ecosystems, I guess their respective blockchain ecosystems, to use the wonderful solutions being created? So elegant. Thank you.
Can I have the question again?
What percentage of investment should be allocated to bringing in new end users?
I think it depends on what stage the project is at. But I think the other panelists actually have more experience with this specifically than I do.
I'll go for it. No, I just want to say, I mean, from the MetaMask perspective, right, there is a huge investment on, for example, MetaMask Learn, so the end user education, because we understand there is a big, let's say, developer need, you know, to work with Snaps, API, Flask, this kind of like tooling for developers, but there is a huge need for end user education. So I think, I don't want to say percentage, but it's a big chunk that not a lot of projects are actually, I think, doing from the user perspective. They're really building, you know, developer education content and less user education content.
Yeah, I feel like a lot of projects are spending, I don't know the percentage, but like on just pure marketing, right? Nothing to do with the usability improvement of protocol or products. So from a grant's perspective, obviously we wouldn't do marketing, right? Not that much, right? Unless there's a very niche or specialized place where we think that we need to encourage more diversity of newly onboarded users. But overall, the investment, I think, should be on improving the usability of your protocol, or like just the user friendliness of the community and ecosystem, so that when people do come in from a non-crypto world, they are coming in because of the usability and actual value add, instead of, or because I saw an advertisement on the side of a billboard. So, but I have no idea what percentage. I mean, we as a grants program don't set targets on, I have to spend 30% on marketing or usability or whatever. It's like it's somewhat reactive in that sense. We try and push for RFPs or encourage discourse and discussions on that, but no fixed percentage from our end. Yeah.
Yeah, we do marketing, and yeah, we kind of very rough ballpark figures, kind of around 30%, which is typical for like a fintech startup. But we're always looking for ways to obviously hack that back.
Or you can put a logo on a Formula One car, which seems really common in 2022.
Slightly expensive.
I would just like to add one thing to this. What I like to see, at least, is that I want to see a project actually develop their technology first. I think that should be prioritized first, as they need to build the product, they need to build the technology before they do a lot of marketing. And I think once the project is built, once there's really something there that's ready for people to use, then I want to see that money being put into marketing and into adoption. I mean, that's what this is all about at the end, after all.
Yeah, that's fair. I have one question that's directed to you, YJ. And someone really made a point of calling themselves Anon for this one. There's a discussion about analyzing investment theses, but Uniswap started from a grant from an unknown developer with no experience. How do we keep funding that future?
Public goods. So I mean, it's from EF grant, right? Without EF grant making that bet or taking that risk, I guess, on behalf of the whole Ethereum ecosystem, then I guess Hayden might not have worked on Uniswap V1, and we wouldn't have Uniswap V2, which is also open source and forked to I don't know how many different forks, which maybe not all of them, but I'm sure some of them bring added value. And as every step of the way, if the licensing and the fact that it's open source and accessible and well documented, that culture continues, then yeah, we should keep encouraging that, right? So kind of, I guess recently there's also like alternative ways that are being experimented on doing this type of public goods funding, right? Optimism doing retroactive public goods funding. which is in first round experimental stages. And we as a grants program currently are not looking to do retroactive public goods. We are still looking to fund future stuff, right? So I think at the start when I was saying that, I hope that we as a community, as an ecosystem, can keep pushing for that. That will help encourage more, Hayden Adams, let's say, to come in and experiment and take a risk and without losing too much money on, their own, but then build stuff that other people that can then fork and build upon. I think that's the important thing. Yeah.
I'd like to just take a moment, because I believe we're entering the near end of the panel. I just want to take a moment just to acknowledge how beautiful I think all of this is, that we're able to create these alternative funding sources that, think about it, Ethereum itself was funded from an ICO. Right, all of this comes from people getting together in this freedom-loving way and cooperating together and building these amazing and these useful things. And I think at the end of the day, I think that's much of the Ethereum and the cryptocurrency ethos is, I think, part of that. And also to acknowledge that, people sometimes talk badly of the ICO boom, but they forget that the majority of the DeFi blue chips today actually come from that ICO boom. That was when all of these things were funded and built. And I think today we're seeing that continue in the form of grants, in the form of new projects. And I think this is absolutely critical for the space to move forward and empowering. And we're actually empowering each other in the process as we believe in each other and we believe in this vision that we're pursuing. And I think that's just this beautiful thing.
You could have really saved that for the really end in 3 minutes. That was beautiful. So the last question, which is to all of you, is can you share kind of what is one exciting problem in the space or blockchain challenge that hasn't been addressed yet that you guys want to fund?
Scalability.
I would add specifically, I want to see more effort being done on sharding, layer one scaling.
There was an event on scaling last week. I don't know if you went.
I did.
But yeah.
I don't know. I'm excited about aggregators. Like retail aggregators for data, like Dune or Nance, and there are more, let's say, open source. So and of course, like layer application top of layer layers, like play to earn. I don't know, play to earn on different layers or different sort of things. So I'm excited about this. Yeah.
Yeah, I feel like I'm beating the same drum over and over again, but like I'm excited, looking forward to people exploring and researching new ways of pushing for public goods funding, right? The retroactive public goods funding, maybe it'll work, maybe it won't, I have no idea, right? And then because a lot of it actually comes from community treasury, setting up grants, and for that, then there's the governance side of things. So that's something that I myself am very interested in. I would like to see more people doing research and experimentation on different governance models for DAOs or for treasury, right? So, yeah.
I'd like to just agree with your point, because I manage a fund that's profit motivated. So generally, public goods is not something that we're able to invest in. So I'm glad that these grant programs exist, and that again, through this type of blockchain funding, that we are able to fund these things, for the betterment of the whole ecosystem. So I'm just glad that's a thing and that exists.
Thank you, and I can get you a room if you want. Thanks ever so much, everyone. Thanks so much for the panelists, for all of you. Please give one big round of applause. Thank you, guys. Thank you.